Hey guys, it's Ryan here at Vision Books, and today I wanted to talk to you guys about how to read your profit and loss statement. And for those of you that don't know what a profit and loss statement is, I'm here to help. Um, I know most small business owners usually run their businesses off of what they see in their bank account day to day, whether or not they know they can make a purchase, hire somebody new. You know, if you have a good month of collections, your bank account looks great. If you don't do so well, your bank account might be looking a little slim. But I want to be able to help you guys grow from looking at your bank accounts to being able to read your financial statements. And so we're going to start really basic today and go over just some key words and line items you'll be able to find in your profit and loss statement to be able to help you understand exactly how your business is doing and where you might be able to make some changes. So let's get into it. First off, I think some of the key terms we're going to look at today are revenue, gross profit, and net profit. Um, these might be some, you might have heard them before, or it seems very accounting focused, and I'm going to help sort of demystify these for you today. So jumping into revenue. Revenue, we're starting at the very top, right? So revenue is fairly straightforward. It's basically anything that you've sold, right? And so a profit and loss statement it generally measures a period of time for your business. So you can either look at a profit and loss statement for a month, a quarter, or even a year. And so when you see revenue on your profit and loss statement, you'll see that it's anything that you sold in that time period. So whether that's services or products. Revenue can also be broken down into a formula, right? Revenue or sales is going to equal anything you sold for the month and how much you sold it for, right? So if you sold 10 widgets for $10 each in the month of March, you made $100 worth of revenue or sales. And this is going to be the top line of your profit and loss statement, right? When people talk about top line revenue, top line sales, this is what they're talking about because it's the very first thing you'll see on any profit and loss statement. And then, depending on everybody's profit and P&L statement is going to look differently. You can have it broken up into different divisions, different types of products, and so on and so forth. But really, just at a high level, we'll start with sales because that's what runs your business, right? That's the fuel. Moving down the P&L statement, we get to gross profit, right? And what is gross profit? So as a formula, gross profit equals revenue, again, and anything we sold minus our cost of goods sold. You might be asking, what are costs of goods sold? I've never heard that term before. That's all right. Cost of goods sold is simply anything that you paid for, whether that's materials or labor, to produce your product or service, right? So if it cost $8 to make that widget, we're going to subtract $8 from the $10 worth of revenue that you just sold, and you end up with $2 worth of gross profit. Now, what does gross profit measure, right? We see it on a P&L, it's sort of halfway down, right, sort of towards the top. And gross profit really measures how efficient your core business is. So subtract all the kind of excess expenses, additional fluff from your business. How much does it cost you to make that sale, right? And that's how we see kind of how efficient your core business is. If you look at your P&L for the first time, I help sell. But if you see that your gross profit is pretty small, it can either mean two things. It can either mean your cost of labor or cost of goods sold or cost of fulfillment are too high, or you aren't pricing your product or services high enough to then make a difference to your gross profit, right? You're really sort of breaking even just at gross profit, and that's not where you want to be, right? You want to have a pretty good margin of gross profit, so then once you add in all the extra expenses, extra fluff that helps run your business, then you can end up with a sizable net profit margin, and that's what we're aiming for here at Vision Books. So after we get through gross profit, we get down to net profit, right? So at the bottom, net profit, sort of what we call the bottom line here. Let's review. We've taken revenue, all your sales for the month. We've subtracted out your cost of goods sold or your cost to fulfill. to get your gross profit. And now we're going to take your gross profit and subtract all that excess, that fluff from your business, right? Operating expenses and taxes. And what are operating expenses? These are going to be the general fluff from your business that help you run the day-to-day operations that we add back in, right? These are going to be things like rent, advertising, office expenses, sort of business licenses or utilities, things that help run the business but don't actually contribute towards your core product or service, right? If it's not the actual labor providing the service, or it's not the actual materials or labor to create the product, then that's up higher as part of your cost of goods sold. So then finally, once we've taken out all the operating expenses and accounting for business taxes, right, then we get to our net profit. And that is our bottom line number, and also extremely important, right? Net profit is the money left over that you can either reinvest in your business, you can save it for a rainy day, or you can take it as a distribution as an owner. And that's really a key metric, right? So if you're looking at your P&L statement and you're seeing, oh, my gross profit margin isn't that great, like I don't have a lot of leeway, and then you take out operating expenses and taxes and you see, hey, I didn't do so well for the month. I didn't even make a profit. My net profit is zero. I'm breaking even. That's where we can see how we can make your business a little bit more efficient, right? Do you have a lot of software costs that you might not be using all the time? Are you paying a lot in rent for an office that maybe you and your employees aren't really utilizing and you might be able to give up? Or is it going back to your cost of goods sold, your cost to fulfill? Are your labor costs really high? Or are materials really costing you a lot? Are you able to switch vendors and find a new one? These are all different levers that you're able to play with as you run your business. And being able to read these definitions in your profit and loss statement will help you understand exactly where you should start making changes. I know it can be a big jump from looking at your bank account day to day or week to week to jumping into your P&L. Again, week to week or even month to month, but making this jump and sort of familiarizing yourself with these terms and being able to read your profit and loss statement will help you better understand how you run your business and where you might be able to make changes and adjustments to better grow that bottom line or that net profit. So now let's take a look at an example profit and loss statement and see kind of what it looks like and where we might be able to make some changes. Here we go. So we're comparing 2 months, right? January 2023 to December 2022. And we've got a variance column as well to help us understand exactly what changed month to month. So we'll start at the top, right? We've got revenue from general sales. And you can see we did really well in January 2023 versus December 2022. More than doubled our sales, which is impressive. As an accountant, looking at this P&L right off the bat, I can already tell that there's seasonality built into this company, right? And we'll discuss that in a future video, what seasonality can look like for different businesses and how to forecast for seasonality. But getting back to our P&L here, we see that we start at the top with revenue, right? And these are all our sales for the month. So we sold X amount of services at a certain price, and we collected $60,000 worth. Next, in order to get to our gross profit, we're going to take out our cost of goods sold, right? So that's going to be our cost of labor. So I can see here that this business owner is paying people to provide certain services. They've also got white label services, apparently, that they're selling as their own. So we're going to take these costs, right? There's $23,000 worth of costs that we're going to subtract from the $60,000, and we're going to end up at $37,000 in gross profit for January 2023, right? And gives us a profit margin of almost 61%, which is huge, right? That's a great, healthy, and almost a little too good to be true margin for the month, especially when you compare it to December, when you had, your costs were almost equal to the sales made, right? And that's how you ended up with not even a percentage of gross profit margin. So we'll work our way down and see how that affects the business. So we've got a healthy gross profit in January. And then we need to take out all the fluff, all the additional expenses that a business requires. It might be fluff, but it's not what it costs to run the core business, but to still keep it operational, right? So you're going to have advertising and marketing, contribution to charities, some depreciation, some depreciation in December, which we don't have in January. But general business expenses, office expenses, and professional services. And finally, utilities. And then from there, we've got our $4,000 worth of general business expenses. We'll skip the operating profit for now because this business has other miscellaneous expenses you'll see in December here of $5, but it's a little inconsequential for our purposes today. So we'll take this operating profit. It's going to be the exact same as your net income or net profit right here of $33,000. And that's got a net income or net profit margin of 54%, which is huge. I know the owner was extremely happy after having kind of a tough December, it looks like. They were struggling to initially break even here at gross profit, and that didn't leave them any margin for all the additional business costs throughout the rest of the month, right? We had a lot more advertising and marketing spend, significant amount of depreciation, which contributed to about $8,000 worth of additional expenses that you need to take out of our gross profit, which was only $110. Now you can see here is where we get to our negative net income or our net loss of $8,000 for the month in December. And so you can kind of tell exactly how well you did and where you might need to make changes. Say we were just looking at December, we'd have to work on either cutting these costs of labor or work on growing sales. Those are kind of the two levers that we really need to work on immediately before we get to cutting business expenses. And so with these terms, I hope you're able to get a better understanding of what's going on in your business month to month, year to year, or even quarter to quarter, rather than looking at, hopefully, not just your bank account, which, although it is helpful and it's a good place to start, a profit and loss statement can really help you understand exactly where things may or may not be going wrong in your business. You can also see where things are going right? Sales in January were great. What happened? Did we change something with collections? Did we change our process? As well as going back to December, what really went wrong? Are people just not able to pay in December? Are people holding on to money because they want to afford Christmas gifts? Or is it, hey, we need to take a second look at how much we're paying people to provide these services and why it's so high. So I hope this has been a really helpful exercise in better understanding a little bit more about how your profit and loss statement works. I know it can be daunting. There's a lot of accounting terms and lingo in there that you may not understand or be able to read, but hopefully breaking it down piece by piece will give you a better understanding of how your business is doing, where things are going right, where things might need a little adjustment. So if you've never seen a profit and loss statement from either your bookkeeper or your accountant, give us a call here at Vision Books. We can get you set up in order to run a more successful business. Thanks so much, guys. I'll see you next time.